Is there any one thing that you can share that the world doesn't know about Barry Minkow? Preferably something that's humble as opposed to self-serving that might be of interest to share. And again, if not, that's just fine.
My gosh, Dave, do I make self-serving comments that often that you have to provide that?
Financial fraud takes many forms. At our agency, we see cases ranging from online Bitcoin scams that steal a couple $100 from somebody, to embezzlement of corporations that could be in the thousands, all the way up to complex fake investment Ponzi schemes that steal millions. We receive about 1,000 inquiries a day from people who have incurred losses from some type of scam. In every instance, our wish is that we could go back in time so that the victim could avoid the scam in the first place. That's why so many of the videos on our channel are dedicated to pointing out the red flags of possible fraud and instruct on how to use skepticism to uncover a fake investment scheme. An excellent resource for learning about how fraud works is From the Inside. In this video, we have a conversation with such an individual who has been involved with several cases on the inside as a convicted fraudster and a scammer. Interviews like this are a touchy subject. It's important to find a balance between obtaining any kind of insight without providing a platform for justification. In our experience, the best way to do this is to maintain a factual perspective. We're not intending to showcase or redeem the person, but we'll also not take excess time for a condemnation. There are plenty of reasons to call Barry Minkow a bad person or worse. He's currently on federal probation for 2 cases involving insider trading and embezzlement from his church. This was after being released 16 years earlier on a separate case of securities fraud, money laundering, and bank fraud. In addition, he currently has judgments and restitution due to his victims of almost $1 billion. Conversely, in federal court in July of 2011, the Securities and Exchange Commission confirmed to the court that he had uncovered about $1 billion in fraud in over 13 cases that he worked on. His federal probation requires monthly criminal restitution payments, random drug testing, and full financial disclosures to the U.S. District Court each and every month. You can read more about Barry in the links below. This video interview is long enough as it is, and further recital of his history has been done many times elsewhere. There's even a movie about all of this, but even that's a complicated story. The intention of this interview video is to obtain a perspective from a fraudster as to the mindset from the other side. It does confirm many of the best practices of fraud prevention and investigation that we've talked about before, and we hope you find it interesting.
Very nice. So the purpose of what we're going to talk about is for investigators and potential investors to learn about fraud, to be more skilled at preventing and recovering losses. We use it for training on the website and our YouTube channel. So I guess we'll start out with what would be a good way for potential investors to recognize and prevent a fraud before losing money?
So that's a great question, Dave. And I think it was once said, and perhaps not by me first, but people do more due diligence in the produce section of their supermarket, differentiating between a ripe banana and a non-ripe banana, than when they make a decision to invest their entire life savings in some deal. It really is kind of sad on the one side of just how quickly investors, prospective investors, are to part with their investment dollars and really not do a whole lot of due diligence. And perpetrators rely upon one thing: word of mouth. So to get the person who's going to invest to drop their guard, I want them to have been introduced by someone who has a history of perhaps receiving great returns. I had a very good experience with, let's say. And so by the time the person is meeting the investment opportunity, they're already sold because they were brought in by someone either through affinity, someone in their own church or synagogue, or someone who has already been receiving large returns. So heck, it must be legitimate, and they jump right in. So the issue is my advice would be objectivity, no matter who brings you the deal. And if you spent your whole life earning it, it's worthy of your sacrifice before you invest to do a lot of front end loading research before you invest.
Do you think that referral type entry to an investment, a fraudulent investment, erases due diligence that investor would have done? Or do you think that these are unsophisticated investors that wouldn't have performed due diligence anyways?
Well, no, because you look at the victim impact of some of the most brilliant people that I know, whether you're looking at the victims of the Madoff scandal or the James Lewis scandal or any large Ponzi scheme, you would be surprised, doctors, lawyers, accountants, it really isn't that. I think it's more of a affinity. The perpetrator's goal is to get you to drop your due diligence guard so that you will not ask the tough questions or come to the deal assuming the best. So I think relationships are so powerful, Dave. They're more powerful. Your feelings about a particular person appear to weigh more in your investment decision than the actual objective sources and uses of cash. Is the security there? Is it a registered or unregistered security? So forth. So my advice is always, no matter who brings you the deal, no matter how much you love them, no matter how much money they have been receiving in terms of returns, try to maintain your objectivity, and that would include some steps proactively. Money to invest is easy to give, but if it's a bad deal, impossible to get back.
So in those affinity type investments, whether it's a ethnic community, a church community, a social group, whatever it is, and smart people will become blind to the normal due diligence they would do, how does a group or person introduce that skepticism in a way that's not awkward? So in your example, like if you can't trust your pastor, who can you trust, right? So how do you introduce skepticism without being basically a jerk within your group?
Yeah, you might remember the synagogue in San Diego where they had that shooting, and then that one guy was indicted, the rabbi, and leveraged his position to exploit the members. And I think one of the things is it's not personal, is that you're, almost like a Pavlovian dog response is when it comes to money, it isn't personal. But so that we can preserve our relationship, I just want to go through these simple 3 or 4 steps before I invest. Please understand it's not personal, because the minute you push back or ask questions, it's interpreted as, what, you don't trust me? And that's exactly kind of the position the perpetrator wants you to be in. He doesn't want to have the tough questions asked. He doesn't want CPAs analyzing his deal. He doesn't want audits done. He wants somebody to come because somebody who is loved and trusted in their lives believes that this is a great deal. So you're coming, you should be, lucky that you're invited. So to combat that, to neutralize that, I keep separate categories. This is my church, or this is my ethnic group, and these are my friends, and I do anything for them. Separate category when it comes to an approach on investment. My wife and I, or whoever it is in your life, have a certain system that we go through before we invest. It's not personal. It pre-existed before I knew you. Please don't be offended, but we kind of want our CPA to take a look at this. We kind of want, somebody who's an expert in this industry. So if you're going into a real estate investment or a securities investment, you want to probably find somebody who's familiar with that industry to say, hey, normally and regularly, does this industry throw off these kinds of returns that I'm being offered in this deal over here? So and then you always qualify it. It's not personal. Our friendship is a separate category. These were put in our lives before we met, so please don't be offended.
Do you think that use of a third baseman might be one of the only, if not the best, mechanism to throw kryptonite into the deal? Because, if you just count on a potential investor using their own willpower to say, no, I have this separate money, I'm keeping this separate, a good investment fraudster will be able to kind of manipulate those thoughts and say exactly kind of what you suggested. Well, what are you questioning my my integrity. You're questioning this thing, and that doesn't make you a good member of this community. Do you think maybe bringing in a third baseman and a counter CPA and saying, look, it's not me, it's them, right? Or is there some other mechanism? Because some people are just defenseless. Doesn't matter how much you want to count on their willpower, they're going to be able to be manipulated by a really good investment scheme. Is there a third baseman or some other mechanism that somebody can throw into the works that'll gum up the gears for a potential fraud?
Yeah, that's a great question, Dave. I think a couple things come to mind. Number one is you have to stress that here's the mindset of investing. If you're going to invest your money in anything, roll up your sleeves and calculate that you're not going to invest in something that isn't going to first cost you something, whether it's due diligence, hiring an expert, an ounce of prevention. So what too many people do is they want to invest, and when it comes to doing some homework, they're given an offering memorandum that thick, and they're told that, hey, you go ahead, you're on your own. You read up all you want, and they're intimidated. They back off and just say, well, my buddies said it's a good deal, I'm going in. So you'd be surprised how many decisions to invest are made that way. Too lazy to do the due diligence, don't want to spend the money. Listen, if you're being offered 20 to 25% returns annually, and if it's legit, it's worth $3, $4, $5 to make sure it's legit before you invest. And if it isn't legit, would you pay $3,000 to get $200,000 back? I mean, I just feel like don't be so penny wise and pound foolish. When you're going to invest in something that you know nothing about, be prepared to spend a little money with a CPA and a lawyer. It's well worth the expense, or a private investigator. The most important investigation that can be done is what Active Intel does and other companies like you. Deep background checks on the people, period. More important than anything is warrants and representations of the promoter. I want to know the lifestyle of the promoter. Has he got priors? Has he been disciplined by FINRA? Has he got, busted for something? Is if he's a financial advisor and he was bankrupt 3 years ago, I don't want to take advice from him no more than I want a 500-pound weightlifting trainer, you know what I mean? Or a fitness trainer who's morbidly overweight. So these are things that are going to cost a little money. And so you have to drive into the minds of the investor, hey, listen, this is going to cost you something, but you're going to be at peace and you're going to avoid making the big mistake.
Well, the investigation of due diligence of a potential investment or a further investment, that's one thing. Do you think that it's almost certain that an investment that is not legitimate or that has risk would have principals who would have prior activities, records that would be red flags? Or do you think there's examples of squeaky clean principals that could still be running something that is not legitimate?
Yeah, so good point. Rick Marcos, MX Factors, I think he's doing 20 or 30 years right now. He had a very good background. You're right, you wouldn't have found anything there. However, he was offering 57% annual returns in the factoring business. So it's going to show up somewhere. So yeah, you're right. First-time offenders, especially white-collar crime, are common. So let's talk about the next part.
For an investigation of, let's say, a victim or potential victim, where would an investigator look to either uncover the fact that an investment scheme or any other type of scam is illegitimate, or if one is known to be illegitimate, how to pursue on behalf of the client to either recover or to cease losses?
So let's start with the front part of that. The most important thing for me, Dave, if I'm going to look into a particular deal, is industry experts. I do not know, you do not know the widget industry, the wrench industry, the real estate industry, the penny stock or the Forex market. You must understand that the warrants and representations being made by the promoter can range in any kind of deal. I mean, I had somebody want to buy a trucking company. What do I know about trucking? Well, I know there's industry experts in trucking who could say, this guy says he's making this much money. This is what he's saying in terms of how much returns he's getting. Is this tenable with your industry? To me, more important than anything else is an expert in the industry that you're about to go into, either passively, promoters making the investment for you, or actively buying a business. So that's part one. So industry experts, background search, industry experts testing the business model, asking one question: normally and regularly, do people in this industry generate these returns? That's it. I just want to know if it's tenable. I want to know if the business model holds up to an industry expert. In fact, at ZBest, you could have uncovered the fraud, and I do auditing classes on this. If there was if they would have read the Society of Cleaning Technicians is an industry journal, and it just talks about the carpet cleaning industry back in the day. And it would have said that what we were claiming was we were doing $50 million in restoration jobs with gross profit margins between 30 and 40%. Well, if you would have read the Society of Cleaning Technicians, water restoration jobs, the dollar average was about $1,000. It was Mrs. Jones's overflowed toilet. Rarely, if ever, were there multi-million-dollar jobs ever. So my business model that I was representing to Wall Street was untenable if checked against an industry expert. Does that make sense?
Well, let's take it a step further. Take it a step further. When those types of observations are made, which not all investors might make, there's usually an answer for those. Even, Bernie Madoff, he had, I have some secret, scheme, or I have some secret algorithm. What's the next response in that chess match from the investor to kind of burst through whatever that answer is? It could be, we have a new system, we have a new business model, there's some thing that we can't tell you about. What is the next way to pierce through that answer that usually the investment will offer, because they're ready for that in most cases? How do you get through that as a potential investor or an investigator?
So other red flags that I would cite, and remembering this, fraud is not compartmentalized, meaning we don't just lie on our resume. Check the resume. If somebody's lying about a degree, you know what I'm saying, then where else are they lying where it serves their best interest? In like manner, if someone is lying about their business model, and I can't prove it through an industry expert, and I think that they're not telling me the truth, then I go to the next thing. So the next thing for me would be to test independently, corroborate what they're saying outside of them, meaning go out and test for sources and uses of cash, but doing it, for example, in the Rick Harkless case, he said he had all these customers, which is how exactly what you just said, Dave. He's able to generate 12% every 90 days, or cumulative 57% a year. Critical case to remember, MX Factors, Rick Harkless. He said because he had all these customers. So, if you're an investigator and you're a factor, you're going to have a UCC1 lien as you as the lien holder. So you know what we did, Dave, to uncover the fraud? We went to the next level, like you said, when he made the excuse of how he's able to generate these returns, even though every other factoring company said they were untenable. My customers still didn't believe me. So we went out and did a UCC search. There were no liens because there were no customers, because it was a Ponzi scheme. So testing what the promoter says outside of the promoter and independent of the promoter. And it rarely will these promoters have audited financial statements. If they do, that doesn't necessarily mean there's not fraud, but there's a high likelihood that there's probably not fraud. But then again, Madoff had audited financial statements. But at least someone outside the promoter is cooperating warrants and representations of the deal.
Well, let's take a look at that outside that compartmental of the actual fraud. In many cases, if not in all cases, there are third parties that enable the fraud. Some are intentional and are not necessarily part of the fraud, but they're, wink, wink, nudge, nudge. They're in on the knowledge. Some of them are unintentional or sometimes unknowing enablers. Like you said, an accountant who does a financial statement that maybe doesn't do everything 100%. It may be a sales organization that's happy getting commissions on something selling that maybe is not 100%. It may be even attorneys in some cases. What are ways that the third party aspect can be used by an investigator to uncover it? Second part of the question is, what are ways that an unintentional third party can prevent themselves from becoming an enabler by identifying it from a closer perspective than a potential investor?
So I want you to hold part 2 of that question because it's too important to not address. But wouldn't current customers be enablers if they're recruiting? And that's a great point you made. The number one reason for, even in a particular case I'm currently working on, you're incentivized to bring in new people, financially incentivized with better returns. So always unknowing, unwitting enablers are people in the deal who are asked to refer their friends and receive a financial benefit for doing so one way or the other. The other thing is the imputed credibility issue. This is critical. At ZBest, we had television commercials in 3 states, and I was on Oprah Winfrey, and I had a Big 8 accounting firm, Big 8 back in the day, and now it's Big 4, but back then it was the Big 8, so I must be legit. So perpetrators and promoters give to big charities, hire sheriff's departments for securities in their own town, anything to impute credibility and legitimacy to their deal and to themselves. And that is what makes third parties vulnerable. So if I bank at City National Bank, or if I have this accounting firm or this law firm, the first thing I say, or if you're a public company, the first thing I say is, do you know how much due diligence they do on Wall Street here? Come on, if I wasn't legit, I wouldn't be here. Great argument, because they do a lot of due diligence in the registration statements and the fully reporting public company and the scrutiny of law firms and accounting firms. But ZBest was public and it was a fraud, and there's been others. So you're exactly right. The promoter will grab onto, that's why big charities with big names and let everybody know about it, because there's an imputed credibility that comes with associating your name with police departments, large gifts, movie stars, banks, financial institutions, anything that imputes credibility by association. And these people that are associated have no idea.
They don't, and that's one thing. How can they prevent that? Where sometimes the organizations get clawed back. If there's an insolvency, sometimes the trustee, the Scott Rothstein case in Florida, they clawed back a lot of charitable donations. Some of the charities gave it back voluntarily because they didn't want to be associated or benefit from it. But in some cases, it was financially untenable for them to voluntarily give it back, but they were clawed back. And that third party is not looking for a fraud. They're not looking at themselves as an investor that would perform due diligence. Is there anything that a third party can do in the normal course of business to make sure that they're not unwittingly becoming an enabler, either by association or just a use of their goodwill and their kind of good standing in the community, or even by actively taking action? Sometimes, banks will let a good depositor slide on filling out forms because, that's so-and-so, they're, big customer. Is there anything they can do, or is it just kind of blind luck that you don't get roped into one of these things?
So, well, let's take it from the accounting firms, what they're doing now. It's very difficult if you're a new company to sign with a big 4 accounting firm, because exactly what you said, they don't want future liability. And the best clawback example is the Madoff case. I mean, investors in that case are getting upwards of 70 cents on the dollar, and largely because exactly what you said, Dave, the clawbacks, the aggressive clawbacks, and these poor innocent people that didn't even realize, and they're now having to pay zillions of dollars back, and it's tough. So I think we should follow the accounting firms and kind of even some law firms, and their model is they have a template. And there's been enough fraud cases for banks, law firms, accounting firms, and financial institutions to develop a template from just past cases of alone that establish points of similarity, that this is for example, if you have a guy come in and he has an investment and he's getting checks for $25,000 and $50,000 and $60,000, and you're watching the account and he's an investment advisor, but he's not, you can check 2 seconds on Finder to see if he's registered. There are things that you could do. There are red flags that happen with these deals that end up being frauds that you can show it took to protect yourself. So for a bank, financial institution, that's one thing. For a nonprofit organization, for them to invest straight into, and you got to remember, in Madoff, there were feeder groups, right? So some of these people didn't know, Dave. So there's no way, if you're going through a feeder, that you can do due diligence on a deal you've never even heard of. So what does that tell you? Avoid the feeder, because you never know what the end product is, because you're being blocked out of the due diligence. That's how the Madoff case was so detrimental. And the clawbacks is these feeder funds knew who Madoff was, but the people who were given the feeder fund, can you tell me, Dave, how do they defend themselves? They can't. They don't know who the end user of the money is. So know who the end user of your money is that you're investing in, and do the 3 steps are simple background check on the primary principal and maybe one other. I would always do the CEO and the CFO, because those are the positions of trust that matter the most. Secondly, discount completely current happy investors. Why? That's all the due diligence most people do when they invest in the deal. They call a few current. Well, listen, if you're running a Ponzi scheme, what's the only way you're going to get caught? Oh, that's it. You don't pay back your people so that you owe money to. So in order to keep everybody quiet from running to the SEC or the cops, I make sure my payments are on time. Accomplishes 2 things. 1, people aren't telling on me. And 2, they're happy. And they're telling just the opposite. They say, I'm getting my check every month. So of course a perpetrator of a fraud, of a Ponzi scheme, is paying their people on time, because the alternative would be detrimental. So that's not a test. The test is deep background check on the CFO or CEO. And what many of these frauds are run by one-man shows. You might have other employees, but all decisions. That's a huge red flag. When there's one guy who's kind of overreaching, the James Lewis case, it was a one-man show. Financial Solutions, a one-man show. Pinnacle, a one-man show. So you have these cases where they're largely one-man shows. Watch out for that. And then the other thing would be, before I would invest in a deal, if I'm a nonprofit, I would just ask somebody, a board member, who might have an accounting background or a legal background. Is this a registered security? Are we accredited investors? Is this blue sky? Are these people FINRA? That doesn't mean it's legit, but it certainly increases the likelihood that it is legit. And then the other thing do the numbers make sense? Do people in this industry normally and regularly generate these kind of returns? Background checks, legal, normally and regularly test for the business model. You've just increased your chances 80% of not being defrauded.
And maybe adding in the fact of verifying the underlying asset. What is the money going into? Discounting
Sure.
the current investors and the other things, and adding in, making sure that the asset is actually there.
Like the MX factors, make sure they're actually doing receivables. But when you ran UCC once, which are public records, remember, housing records are real estate, they're all public records. So doing just a little bit of due diligence, you can see, for example, the MX factors had no customers, ergo the business model implodes.
So let's talk about another inside perspective. In fraud investigation, we always talk about the fraud triangle, the opportunity, the need, and then the justification. Is a typical fraudster from the inside recognizing those 3 things, or are they just blindly pursuing that accumulation of capital, or do they see those 3 things happening or aware of them at all?
Well, I think many perpetrators of fraud, unlike me, are actually bright and not stupid like me doing it twice. They know this. Here's the thing, Dave. I want to make sure you know this. Every perpetrator of fraud wants to sleep at night. So they tell themselves, this is only temporary. In every fraud I've ever uncovered or been involved in, much to my shame, there's always a cure. And the cure is, and you just name the fraud and I'll tell you what the cure is. In the case of James Lewis, which was a $300 million fund, he was one good trading day away from paying everybody back. He really did want. These guys would pass a lie detector test. Did you ever intend to defraud anyone? They would say no, and they would pass because they never intended to. Of course, we lie and justify because we want to sleep at night and say, well, everybody lies on a bank loan application to qualify for that loan, but as long as you make the payments, nobody gets hurt. Just
So
add
the
a few
same
zeros in your
justification on a small scale. If a bookkeeper accidentally takes $100 from the till, figuring I'm going to pay it back on payday, or if a fraudster saying even Bernie Madoff at some point thinking, well, I can make up for this. At some point, there's a recognition that it's never going to be able to get fixed. Once you cross that threshold, what happens then in the mind of the fraudster where they know they can never fix it? Is there another justification that replaces that? Maybe I can fix it someday. Now it's just blindly just riding the wave.
So I think the Madoff was the meeting with the son, right? This boys, when he said that night, it's over. It's all a Ponzi scheme, and they went to the FBI. But I'm going to tell you this. That meeting, he did everything he could to avoid that meeting. please know, Dave, that perpetrators do not want to go down because they know the consequences and there's too much paper trail. They know they're hit. So you want to avoid that equivalent of Madoff meeting with your sons if you're a perpetrator. And you're thinking 5 steps ahead of how you're going to raise enough money, endure or weather a storm. And here's the issue. Right now in America, and this is a prediction that I hope I'm wrong, but I don't think I am. Every fraud is uncovered by an unknown variable. That thing the promoter could never anticipate that becomes their undoing. In my case at ZBest, it was a reporter who reported on just a few $1,000s of credit card fraud while I was a $300 million public company. Never saw it coming.
And a license plate on a limo that didn't match.
Correct.
Yeah.
So that's right. So you have a small thing. It became my undoing. In the Madoff case, it was the 2008 real estate collapse and all the redemptions. So I believe that this pandemic, unfortunately, one of the side effects that nobody's talking about of COVID-19 is how many frauds are going to become exposed and people are going to sadly get hurt because it's easy to raise money at the Dow's at 30,000 and unemployment is 3%. But now unemployment is another 1.1 million filing today. And even though things are improving, people are struggling. And so the perpetrator is desperate for cash. And if he can't get that new cash coming in, the thing implodes. And my fear is there's going to be some imploding because of the unknown variable that is COVID-19.
Is there anything that investigators can do to either accelerate that or to kind of be a catalyst, be that black swan event that an investigator can do if they're working with potential victims or potential investors to try to shake that tree loose, in addition to protecting their client from additional or any losses, to try to unwind the investment scheme to begin with?
So that's a good question. It depends. That's going to depend, Dave, on what position they're in. So if I am an investigator, if I'm, Dave Pellegrinelli, and somebody came to me and says, check this out. Well, you're in the perfect position to be able to perform the deep background checks, the legal check, the numbers check. Wonderful. But sometimes investigators are not in that position to be able to do that. When you're called in to do due diligence, you have standing. My problem is today that victims don't give investigators standing to help them, nor do they give analysts the standing to help them. You can't just go to some guy you don't know and say, hey, your deal's a fraud, buddy. You have to, and here's the problem. This goes back to the beginning of our conversation. Investors, while they want great returns and they'll be decimated if they lose their principal, are not willing to spend $2,000, $3,000.
Well, part of that, we see a couple reasons for that. And maybe from the inside, you can give some perspective on maybe dissolving those. One reason is sometimes it's shame. They don't want, if they lost money, they just want to pretend it didn't happen. They don't want to make a big deal about it because they might be embarrassed. If they're a victim upon themselves, that's one thing. If they're a victim to their community publicly, sometimes that's worse. The other reason is sometimes it's a feeling of throwing good money after bad. And those are two of the most significant reasons that some investors who come to us that are looking at a fraud don't want to go any further. Is there any way, thinking about the psychology from the inside, where that can be dissolved or defeated to enable investors to go further?
And this is on you and the investigators. Set up a model that you're a victim recovery expert, because you are. Meaning, if you're an asset searcher, you're a victim recovery expert. Remember this. You don't know the deal. You don't know that an outside auditor just with deep liability insurance, who's a deep pocket, blew it. And remember this. There's one test, Dave. It's called relied upon. What did the investor rely upon to invest? Were there any material misrepresentations? Never forget that. Relied upon. So I'm the investigator. I'm looking for one thing. What did Miss Jones, there it is, rely upon to invest in this deal? So once I know that, then, I saw these audited financial statements that had this big accounting firm there. Bingo. So if those are numbers that were materially wrong, she has standing that her investigator can let her know to a deep pocket that can help her with recovery. Moreover, receivers nowadays are really, yes, they get paid, by the court in a TRO case, but they also are there for the victims, and they will help in having relationships with receivers. If I'm an investigator, you help the receiver recover money that helps the victims. So you need to let the victim know that you don't know what they relied upon or didn't rely upon to make their investment. Yes, they were introduced to it, but there were other things. Maybe there was this big bank that showed up to a meeting that you were at where the deal was being pitched, and they had a table out front. Well, I just put together, if I saw, Bank of America out there and they were opening accounts as we were leaving the seminar, I'm thinking, man, this is a good deal. Well, that's what you relied upon. That could be a deep pocket. So you as an investigator, don't just find the facts, yes, but truthfully let them know that there is potential recovery, and miracles have happened in recovery because people have swallowed their pride. I'm not going to let anybody get hurt by this, and I'm going to do whatever I can within my legal rights to get my money back. Show me what my legal rights are. Show me the relied upon argument and how it exists. And through deep background searches, you can help them do that.
So that gets a lot into the investor/victim psychology, and that's a big part of the investment fraudster. In a lot of the high-profile cases, it seems like the benefit realized by the investment operation is much smaller than the loss to the victim, meaning that, in the Scott Rothstein case in South Florida, one more $100,000 watch to him really meant nothing because he had 15 of them, but the $100,000 loss to the investor was a big deal. Does the person committing the fraud connect with that disparity at the time, and how does they reconcile that? And that might be helpful as an understanding of the victim to be more of a victim's advocate. How do those two different perspectives come together, or don't they?
Yeah, it depends. I like what you said. I think here in my case, in the insider trading case with Lennar, there were no co-defendants. It was just me, and that's it. In the church situation where there's commingling of funds, there was only two outside investors. My thing was commingling funds, wrongly using my company church credit card to pay for different expenses and so forth. And I was guilty, and I got 5 years for it. But I wasn't running an investment fund. I didn't raise money from the congregation. The two people that we did that were involved in the movie and something else were paid back by insurance companies through lawsuits, and we settled, and everything was fine. So I didn't have an investment fund. But I'm going to tell you this. There is a sense in which my story speaks to that, because one guy, and I don't want to mention his name, it just really haunts me to this day because he put up the money to do a movie. He was the executive producer, and it was on a comeback story that, here's Barry. He was in jail. He uncovered all this fraud. He's done great. He's 16 years out of prison and has a good church and this. And I was secretly addicted to OxyContin. I was living a double life. I was doing insider trading and commingling and tax fraud, and completely let this man down and his family. And he totally believed in me. His law firm eventually sued me the day before I turned myself into prison in Lexington, Kentucky, in September 21st of 2011. I stopped at a mailboxes, etc., and turned over all the rights to the movie. It has since come out years later, and anything I could to pay him back, because I felt so devastated on what I did to this man for believing in me. And he dropped the suit in exchange for me turning over everything, proceeds, all that. And it was the least I could do. So perpetrators, when they come to the point where it's over, have a decision to make. Cooperating with receivers, law enforcement, is only going to help victims, because they're going to know, where's the assets? Yeah, Dave Pellegrinelli will find your assets. It's going to take a while, but he'll find it. Or you can just tell me and save us all this trouble. Where's that hidden bank account? What do you have in the Philippines or in Panama? What can we do to help make these victims whole? So if you have someone that's genuinely remorseful and sorry, and believe me, you don't read about this in the newspaper. There are many guys that have done this, that are broken over what they did. They're sorry, and they want to do whatever they can to get their victims made whole, and I applaud them for doing that. The other side is a detachment, a denial, where, listen, they were greedy. They knew what they were getting into, all this nonsense.
Yeah, I hear that a lot. That's that justification leg of the fraud triangle, where there's the victims are greedy, and there's a justification for that. And is there anything in that mentality that can help an investigator get through to the potential victim to become an ally or to be more of a force to prevent additional losses or to search for assets after the fact? Because that's an important point.
Yeah, Dave, anything the victim could do to remain whole, to be made whole, I'm all for. I do think, however, we have to concede that winning over the perpetrator is a huge plus in accomplishing that. And if the goal is make whole the investor, then whatever it takes, even the government coming and saying, if you cooperate, we'll take 5 years off your sentence. The government's focus should not be as much focused on length of sentence in a white collar case as it is on restoring money to those who were devastated, in my opinion. So use that hammer of time, shrink it materially based on cooperation in recovery.
So let's look at this. For an investigator, let's say before that event, before that finality event where the thing comes tumbling down, or if it's an investment that doesn't necessarily get to that high profile stage. Sometimes these investments don't have a big prosecution. They just kind of fizzle out and there's victims that are kind of distributed. What would be anything to validate current investigative techniques or to add insight to where an investigator can more quickly or easily get to the location or source or movement of assets?
So the first thing would be the bank, the sources and uses of cash audit. The only way the SEC files TROs, only way that I'm aware of, is they check the bank statements and they follow the most important thing you can do to help law enforcement and help yourself is follow the money.
So it's flow.
Where you were told to wire the money is where it begins. So let's say before law enforcement, you sued and you wanted the bank records. If I'm a perpetrator, if you get my bank records, I'm dead, because it's going to show that I'm borrowing from Peter to pay off Paul. I can never let you have them. I'll settle. So if you expect fraud and you're not getting anywhere, you sue with a lawyer who has the understanding that we have one goal, proving it's a Ponzi scheme and getting the bank records. If I'm a perpetrator, what am I going to do? I'm going to settle. I don't want you getting my bank records, because that's going to expose, believe me, any financial impropriety, material financial investment fraud is going to be found in sources and uses of cash, specifically in the general checking account. It's going to come in, all that money, those checks that get deposited on the back, it shows you where. Wires, it shows you where. You start there, and from there you'll see zoom, 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 personal account, overseas account in Panama. You'll follow that. The guy's dead, because he said that money was going in to buy this property. It really went into paying 3 different investors. You see what I'm saying? Sources and uses of cash, but we don't have standing like law enforcement does to get those records. Well, you do if you sue. So if you suspect something, a lawsuit with a sharp civil lawyer who goes right for those bank records in terms of discovery will get you what you want.
And if it's overseas, sometimes it's easier with Norwich pharmacol orders or anti-pillar orders because there's less protection in some, European or South American case law. But
here's the thing. Remember I said about relied upon? If I'm I don't want to pick on city. If I'm Chase and I have the business account for the guy who gets money and ships it overseas by wire within 24 hours, you're on the hook for that. That's a red flag. What the heck is this guy doing getting money from these different people? So banks have that responsibility. That could be a deep pocket. That how the bank allowed this to occur. You have investment cases where the bank was sued because they had a guy who was raising money, and the minute it came in from 15 different investors, zoom, it went out to different countries or different overseas accounts. There's no business reason for a guy who opened an account saying he's a developer to be doing that with that money.
Especially
that
if the bank does not have any FARs.
Right.
Right.
That's right.
Excellent. Last question, and we can say no if you like, and we'll end it here, but is there any one thing that you can share that the world doesn't know about Barry Minkow, preferably something that's humble as opposed to self-serving that might be of interest to share? And again, it's if not that's just fine.
My gosh, Dave, do I make self-serving comments that often that you have to provide that? I certainly hope I don't. No, I think that one of the things that when I was in prison almost 8 years and got out in 2018, I was a two-time loser because I had learned Z best and then this case. Which was a total of 10 years when you put Miami and San Diego together because they happened at the same time, just different districts. So I'm a two-time loser. And I ran into a lot of people in prison who had come back. And the first time I was in prison, I had no family, I had no wife and kids, and I was 21. And prison was kind of, whatever. It was, I didn't testify against the mob. I went to trial for 4.5 months. I was a stand-up guy when I really wasn't. I was just a liar. So doing time the first time was different. When I went back this time with Lisa and twin boys who were 8 when I went in, it really set in, not just what I had done to my church community and the people I had let down and the people that trusted me and worked with me and worked with me in accomplishing some very positive things. But all the people I had let down, just completely, utterly let down. Many people weren't aware that I was, for about 6 years, addicted to OxyContin. If fentanyl was around in 2005 through 2010, when I was addicted secretly, I'd be dead. But it wasn't popular. It was Vicodin and OxyContin and living this double life. I had the most important thing that was ever told to me when I was in prison by a prison chaplain, and I'll never forget this, and please forgive the religious connotation, but you asked. He said, Barry, you were a good pastor, but you were living this double life, and you were hiding who you really were. What you really were was you cheated and lied, and you stole, and you let people down, and you put on a persona that wasn't you. And he goes, I want to tell you something. The one that Christ died for, that God loves the most, is the guy you were trying to hide the whole time. If he would have just come clean and said, God, here's what I'm struggling with. I'm a liar and a thief. I need your help. You were trying to hide from the very guy that Christ died for and God loves. And that really changed my life and helped me with transparency and ownership. I never complained about doing time. I knew I was guilty. I knew I deserved far more than I got. And I was going to be given another chance. I work for a rescue mission where it says this. Our motto is, everything and everybody deserves a second chance. I went to my boss. I said, please change that second chance to another chance. For those of us who have been given another chance, grateful. I know I am. And that person I was trying to hide the whole time was the one God died for. So that really changed my life. And I appreciate you asking, and forgive the religious connotations, but you asked.
All right.